It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, available of course every morning on iHeartRadio, Spotify and Apple, and wherever you get your podcast from. We are up to a Wednesday morning, the middle of our working week, and I tell you what, well over halfway through January. It's the 17th of Jan today, and we are headed off to Queensland this morning across the summer break. How many of you flocked into the Queensland area? I suggest plenty from Victoria and also plenty from New South Wales, pouring into the warm sunshine of Queensland. And we are going to Brisbane this morning, which really has had a stellar 2023 last year. At the upper forecast of 4%, Brisbane houses recouped tens of thousands of dollars from the losses that they sustained during the downturn. We talked earlier last year about the Brisbane unit prices, and they're projected this year to result in a new record high for unit prices by the end of 2024. So that is all on the up and up. And joining us is Varsha Daswani, the principal from SAI Real Estate Group. And good morning to you, Varsha. Welcome back to the Real Estate Breakfast. What sort of a holiday break did you have, and are you feeling recharged and energized to attack a brand new year of real estate?
Good morning, Craig. Happy New Year. Yeah, I am definitely feeling recharged. Had a chilled one, so it was good to be back, and I am more excited than I ever was for this year. This year already is looking really strong in terms of the property market.
Yeah, and I think that there is little doubt that economists and commentators are projecting that this year will be, as I said, on the up and up. Always as we head into a new year, a reasonable amount of guesswork is required. You can never say predictions are definitive. More of a guide, because like last year, we found out that things can change, especially with recovery of lost gains that I just mentioned about being clawed back. So looking at the Brisbane market, the property market, what do you think is likely to happen this year?
This year, according to Domain, it's indicated a nationwide surge in house prices by 5 to 7%, with Brisbane's median house price expected to rise by a notable 9%. Like in 2023, there were a number of factors drove the home price rebound. The volume of stock available for sale remained at persistently low levels, while the buyer demand also increased significantly, fueled the house prices. More stock will be coming on the market. There will be more demand, but it's looking really strong in terms of the property market. The house prices will still be going up and above.
All right, so that is Varsha Daswani there in Brisbane this morning. We will come back in just a moment and talk more property.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week. Let's explore together the power of real estate. We keep you better informed and updated.
And if you are in Canberra this morning, good morning to you. I see that the rental market in Canberra is nearing a record high, with house median rents at $680 per week. Now, that is just $10 below the peak in March of 2022. That's according to the Domain Rent Report. They say that units also rose to $560 per week, and that is matching the December 2022 record. But despite this, specific suburbs like Deakin and Denman Prospect have seen notable drops in house rents, suggesting diverse market dynamics at play. And from PropTrack this morning, they're talking about a couple of locations for buyer opportunities this year. One is Albion, Victoria, which is a top 10 low price growth suburb for last year. It experienced a 3.9% decline to 764k. However, it shows promise with a 5.8% increase over 3 years, representing affordable options. Now, the suburb, if you don't know it, is located 14 k's west of Melbourne CBD and is gaining investor interest, with the subdivisions offering townhouses and budget-friendly two-bedroom apartments under the 300k mark. And the other offering from PropTrack this morning comes from Darwin CBD. Despite a 3.9% unit value drop in 2023, it remains 23% higher compared to 3 years ago, and the city attracts attention for its 7% rental yield, strategic location, and of course substantial defence and infrastructure investment. So there's a couple of things to take note of this morning, one from PropTrack and the other from Domain with regard to Canberra's rents.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
It is a Wednesday morning and we are talking property with Varsha Daswani, the principal from SAI Real Estate Group, and of course focusing on Brisbane. And if you are in Brisbane, good morning to you. Let's talk about prospective investors and eyeing the current property market and navigating changing dynamics, with Brisbane emerging as an unexpected contender among expensive cities. I mean, we had this 50% surge in home property prices since 2020, which really does demand a lot of attention. Of course, people have to weigh up the latest inflation data. But Varsha, what does the market predictions look like for you for investors for 2024?
The market for investors is this is a perfect opportunity for investors if they are looking to buy something. Now is literally the time. And I cannot stress this enough, because the rental market is still tight and there is really less supply, which means it is the best time to invest in Brisbane. The rents increased by 8.3% nationally in 2023, extending a slight drop from 9.5% pace of rises in 2022 and 9.6% in 2021. In dollar terms, the dwelling rents rose about $46 a week in 2023. Based on the median rental values, according to CoreLogic, 2024, the rental market will still be at the peak, as there is a lot of demand and not enough supply, which means more investors will be looking to buy in this year.
All right, and for those contemplating commercial property investments this year, strategic considerations, of course, is paramount. So I know that is a space that you are heavily dealing in terms of not only Brisbane, the Sunshine Coast, the commercial property market. How is that going to perform for 2024 in your estimation?
According to Real Commercial and what we are seeing in this market, it's already looking at peak in terms of the commercial property market. There is a lot of demand from buyers, and investors are looking for something with greater returns with 5 to 10 years of lease in place. So industrial will be a really strong market in that regards, because they will have a stable quality tenant for about 10 years plus 10 years, and also medical. If you are an investor looking for something with a long-term lease and stability and really quality tenant, medical will be again in a lot of demand. In terms of office space and retail, it will still be an average performance by the looks of it, because if it's a vacant property, it's gonna take time for it to sell. In terms of commercial property, I think industrial and medical will be the strongest this year.
Now, it was only yesterday, Varsha, we were talking about office space, and one of the big problems is some of these larger offices where they're trying to sort of repurpose them and turn them into residential, because you deal in this all the time. What do you think is likely around the whole office space, where people are sort of got this real preference at the moment to be working from home? So some of the office is kind of drying up, I think, in some areas.
100%, and I completely agree with that. What we are seeing is, in terms of the office space, a lot of owner-occupiers are buying it and not investors are not buying that just because it's not making sense in terms of the yield. So they don't, investors want something with a great return, so they're not touching office space. What we are seeing is someone who is wanting to start their own business or already have an established business and they were leasing it. Now they want to buy and have their own space. And that's something that will work with them because they can still have the flexibility of like having something, and it's good to buy right now. For someone who has an established business or new business, that's the market that we are seeing at this point in time who are buying office spaces.
And in terms of buyer-seller expectations, it'd be nice to get those two things aligned, but they're always a little bit away from each other. How do you see that sort of playing out, the buyer and seller expectations?
I think this year, Craig, it will be very much aligned. Just if you look at it from the past, ultra low interest rates and the pandemic fueled commercial property boom or property market boomed in 2021 because of the low interest rate. And we saw that the buyers accepted much lower yields across, most asset types, raising the prices they were willing to pay, but soaring debt costs through 2022 has created a disconnect between the buyer and the seller expectation. Now, in terms of, again, in 2023, we saw that it slowed down just because the buyer's expectation and what the buyers were ready to pay and what the seller's expectation was, it minimized a little bit. So that was the biggest reason why we saw less transactions in 2023. But this year they understand, and it will be more realistic in terms of when it comes to the sellers. So they will be ready this year, and they know they're not going to ask too much. So the gap between the seller's expectations and the reality is just looking smaller and smaller this year, which is it will be more aligned in terms of the seller's expectation and the buyer.
Well, let's wait and see what actually happens in 2024. That will be an interesting space. Hey, I'll let you get back out there into the Brisbane Sunshine Coast market, and thanks for joining us on the Real Estate Podcast this morning.
Perfect. Thank you so much, Craig.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
It's quite frothy. It's quite speculative in nature. Property prices are, in my view, at least 20% overvalued. Now, I think they're going to remain expensive over the next 3 to 5 years because of this undersupply. And I do fear that we're going to have a very difficult year next year in the residential property sector.
However, sort of the last few months, there really has been some purpose in people bidding. And that might be also because people are getting more confident in Brisbane with auction. The aggression and the amount of bids per auction certainly has risen quite substantially.
You're right. The fear of missing out is certainly a big aspect because there's such a demand for those entry-level properties.
We connect you to the best real estate information across Australia. The Real Estate Podcast.